has picked up in the last 10-15 minutes. A couple of intraday charts will prove it to you. Look at the chart of Infosys. It's gained quite a bit of action in the last 15-20 minutes or so. Now at the highest point of trade for Infosys. Reliance and Tata Motors are also not far behind from the heavyweights. So Reliance is up 2%, and you have Tata Motors that's also gained quite a bit, now up almost about 4%. But Siddarth Bhamre of Angel Broking is with us to take us through the last 45 minutes of this expiry session. Siddarth, what do you advise traders do now in the last 45 minutes? Any stock specific ideas? Siddarth, can you hear me? Okay, I don't think you can hear me, so let me just go to Sudarshan once and then we'll come back to Siddarth. Sudarshan, Sun Pharma, that's been the big gainer today, 4.5% higher. What do you do now?
No, I wouldn't take a trade in Sun Pharma. I am not going to short it, and this is too early to take a buying, say a buy or a trade on the long side. Hopefully, it will settle at these levels, create a small trading range, and that's the time when the message will come loud and clear that it's no longer going down. One day is not enough.
Okay, a few other stocks should be up on your screen. One of them is M&M. That suddenly spiked up more than 1%, and in fact, it's been one of the biggest gainers in this series itself, with a gain of close to about 10-odd%. And other than that, Idea Cellular has gained close to about 4% on buying that spectrum from Videocon in two key circles, UP West and Gujarat. And these circles are strategic for Idea because they contribute nearly 14% to its overall revenues. But we've got Siddarth Bhamre with us. Siddarth, your sense where the Nifty is likely to be at 3:30 or by the end of this expiry, and any individual stocks you would recommend for a short trade?
Good afternoon. We were not expecting market to go towards 7900 in today's trading session, but it has been going to those levels. Why we were thinking that way? Because there's so much of call writing which has taken place, and I'm not talking about today and a couple of days trading sessions observation, but throughout the series we have seen that 7900, 8000, 7800 call were returned in big way, and that's the reason you saw that put call ratio was trading at sub 0.8 levels for a substantial period of time. So this suggested us that we may not have significant upside in remaining part of this series. However, market has chosen to prove us wrong and move towards 7900. Again, looking at the data and even today's data, I feel that we should not see very big upside from current levels in last half an hour or so.
Okay, so no great upsides in the last half an hour, but what are the ballpark, the markers for the December series, Siddarth? What are the initial estimates? How much lower do you think the market could go if this downtrend continues?
So more than F&O data, the liquidity parameters are suggesting that we need to be cautious on this market and not get carried away because 7,700 or 7,750 has not been breached. Even if you look on weekly charts, stocks, indexes suggesting we are still in lower top, lower bottom formation. Without getting much into technicals, look at the depreciation in currency. Look at the FI's data in terms of what they are doing in cash market segment. We have, again, this Fed policy to deal with, though I understand, we all know that it's a stale thing and rate cuts would happen. But even if you know that that's going to happen, liquidity will get impacted. So I strongly feel that if at all anyone has too much of optimism for December series, I think that person would be disappointed, and this market for us purely on liquidity parameters remains sell on rise. I won't be surprised if we see levels of 8,000, 8,050 to start with in December series, but those levels would be good enough level to initiate fresh shorts in this market.
Okay, so if the markets rise to 8,000 plus, maybe you should initiate short positions. But there are going to be so many Qs in the December series. On Monday, we've got the Q2 GDP. Then on 1st of December, we've got the RBI policy. Later next week, we've got the ECB meet, where they're likely to increase their stimulus. And then you've got the FOMC meet, where the Fed is likely to raise rates. And all this along with the winter session of the Parliament, which ends on the 23rd of December. So the December series is also going to be a fairly eventful one. But Prakash, coming back to you, in news which just came out today that Bihar has banned the sale of alcohol effective 1st of April 2016. Which stocks would you have on your radar on the back of that? And, therefore, would there be any trade that you would recommend?
Of course, the immediate impact is negative, so there would only be a possibility of making money on the short side. But since these stocks don't feature on the FNO, we'll rule that out. But what's important for people holding some of these stocks which have seen some sort of a buzz and some sort of attractiveness in the last couple of weeks, and all the way till today morning also when we saw them rally, is don't get disappointed, because none of these players have very large stakes, large market share within Bihar, and there's nothing much at stake which could upset things, except for maybe a United Spirit which has some low value brands which sell out there. So 3 to 5% is the guesstimate that is going around. Globus has some Indian made Indian liquor brands which sell in Bihar, which could get impacted, but the rest of the companies could probably see a spurt, because till April 1st there could be a lot of hoarding that will happen, and in fact there will be an accumulation of sorts that people will want to do before the ban kicks off. So you could see inventory pile-ups and build-ups, and that could mean that December could probably be a fairly large top-line growth kind of a scenario for most of these distilleries and liquor players.
From the frontliners, Prakash, is there more scope in Tata Motors that you see? It's gained about 10% this month. From this 420 rupee level, how high is the risk reward now?
No, I think the risk continues to get diminished, and what seems like happening is Tata Motors seems to be getting much more respect from people who want to start buying into it even at these levels, as compared to what we've seen at the sub 400 mark. And importantly, there are a couple of very strong triggers that seem to be building up. One is, of course, there's a lot riding on the launch of the Zika, what they had prototyped as the Kite earlier. Now this is the third car in the same platform as a couple of earlier ones that they've launched within the Indian market, the Bolt particularly. So I think what's going to happen is it will start getting into the entry level market, which is actually going to take off post this pay commission rollout, and that means that entry level cars will see a huge spurt. So it will start competing with the Altos and the Quids of the world, which is good for Tata Motors. And globally also, so if you look at the kind of numbers that we are seeing come through, the acceptance levels in China, particularly for the new Discovery Sport, it's kind of not as bad as what it used to be 6 months back. So Tata Motors has a couple of positives building up. So I would believe 455, 460 could probably be tested very soon, and then of course it'll go through a consolidation phase of sorts. But from this level to another 10%, 15% upside, I think it's probably ripe enough to get in or nibble into.
Okay, stay on, gentlemen. Let's now go across to Nimesh Shah for a quick check on what the chatter is in the dealing rooms. Nimesh, what's your sense about how the December series is likely to be based on your conversation with market men?
Clearly from a December point of view, it's going to be a very important series to look out for. Large events are likely to impact the December series. So the winter session of the Parliament, the Fed meeting on the 15th and 16th, that will actually set the tone for near-term emerging market flows by the larger FIs. That's been missing of late for across emerging markets as well as India as well. So that is a big event to watch out for from a global perspective. For the November series, it's pretty much a done deal. I'm told the rollovers are close to 60%. So pretty much, slightly lower than what we've seen in the last few series, but pretty much on the expected lines. The broad sense is, the Nifty is going to be in the range between 7800 on the downside and possibly 8100, 80 to 50 on the upside. So that's the range dealers are talking about. But it's still going to be a very stock-specific move. So there is a lot of money which has been made in the mid caps and small caps by retail investors as well as HNI. So that's where the whole action seems to be in the December series as well. There is no clear leadership coming in from any sectors which will actually lead the December series. So that's the broad sense that the Nifty may be range bound, but you might see a lot of action in the mid caps and small caps, and that's the outperformance where you're going to make a lot of money. So watch out for mid caps, but broadly from a larger point of view, it's going to be a very range bound series even from a December point of view.
Okay, Nimesh, thanks for that. That's the word coming in from the dealing room desk. But let's take a break on that note. Our closing bell money control question of the day is to do with Prime Minister Modi saying that he is hopeful of a constructive winter session of Parliament. Will the opposition play spoilsport again? Log on to moneycontrol.com, post your responses there. We'll read out some of the most interesting responses post 3:30 p.m.
Welcome back. In news which is just in, Reliance Infrastructure has just announced that the company that they'd acquired, Pipavav Defence, has now exited the CDR, and consequently the open offer for the Reliance's open offer for acquiring another 26% stake in Pipavav will be from the 2nd of December, which will close on the 15th of December, and the total acquisition, the change in the name of the company, will be completed by January 2016. We'll touch base with the management in just a bit. In the meanwhile, let's now go across to Vishal Malkan, and he'll tell us what to buy or sell today for a reverse trade tomorrow. Vishal?
Yeah, hi. I will go with two buy calls for tomorrow, and the first one would be buy Century Textiles with a stop of 575 for targets of 600. It has broken about the important resistance of 575 with good volumes on daily chart. And the second would be Tata Chemicals, which is showing good accumulation pattern at those levels of 420 and 30. So I'll go with a buy with a stop of 425 for a target of 455.
All right, Vishal, thanks for that. Well, let's get back to the news flow that you just heard, where Pipavav Defence and Offshore will be exiting the CDR process. Nikhil Gandhi, the chairman of Pipavav Defence, joins us on the phone line to give us his views on that. Nikhil, hi, afternoon. In your press release, you say that the exit from the CDR is expected to lead to improved financial flexibility and increased business opportunities for Pipavav Defence. Can you just take us through this news flow?
Yes, please. Thank you so much. This is a big commitment by the Reliance Group, because typically companies who are into CDR are not known to come out of the CDR before their actual time frame. So from that perspective, this is a really a big step going forward. Reliance is heavily committed into the defense business, which is one of the biggest opportunity in this country in the coming years, and particularly the Make in India call given by the Honorable Prime Minister. Defense will be one of the biggest beneficiary of that. Sir, so in order to achieve the full potential, Mr. Anil Ambani agreed to get out of the CDR, which will allow the company to secure far bigger contracts from the defense, because
Mr. Gandhi, this is Varinder. Okay, I just wanted to understand the contours of the CDR. There is still a long-term debt of nearly 5,500 crore and nearly 2,500 crore of short-term debt on the books of the company, that is Pipavav Shipyard. So, can you just run us through what are the contours of the CDR?
See, the very fact that this will become a regular company like what it used to be, and
but how much the interest payment comes down for you? What are those nitty-gritties? Since you have now come as a company out of CDR.
Those information are available on the net of the company, but what is important is for you to understand that the company is getting out of CDR. It will become a usual, normal company, and whatever.
No, we understand that, Mr. Gandhi, but in your press release you say that this will improve your financial flexibility. You're still sitting on a huge debt, so if you can give us any ballpark numbers on how much your debt could come down to eventually, say over the next 1 year, how much your interest costs will go down, and you also say that there are increased business opportunities. Can you in some way quantify that for us?
Yes, please. I think that currently the defense opportunity in terms of the contract is running into $250 billion over next 3 to 4 years. Reliance Defense, which is now acquiring the Pipavav Defense, is pitching for a mega contracts in Army, Navy and Air Force segment, and the getting out of the CDR will allow Pipavav and then the Reliance Defense to acquire a major contract, for which the getting out of the CDR will be a big plus.
No, sir.
In terms of refinancing, the companies, the Reliance has taken the steps, which they will come and make a separate announcement. But the very fact that the getting out of CDR is an extremely bold step, extremely positive step. And of course, since I'm not going to be in the management, but I could see clearly this is a big plus point for any company who wants to come out of CDR. So it is not easy. It's an extremely bold step. It is not easy to get out of the CDR.
Right.
So I'm sure Reliance Group has clear understanding about what they are talking about. So in my mind, it will be beneficial for the company to acquire the large contract from the defense and from the other authorities.
All right, Mr. Gandhi, we'll leave it at that. Thanks so much for joining us. But let's get back to the markets now. Doing quite well. It's just come off a tad bit from the highs, but it's still up about 0.6%. The pharma stocks, not just Dr. Reddy's, but Lupin as well, is now under pressure. So that stock is down almost about 1.5%. But Vander is here. He's been observing some of them buzzing stocks for us, so he'll give us more. Vander.
Well, as usual, a lot of names which are coming up in the small cap gainers, and there are many stocks which are hitting 20% circuit in the small cap space. Jyoti Structures up 20%. PAE Limited up 20%, Porval Auto, which is up 20%, Spice Island Apparel, a new name which came up today, up 20%, Camphor, which is one company which we discussed, when that SH Kelkar IPO came in, that stock is up 16%, Fresh Top Fruits, it seems like no one is drinking liquor these days, so it's like Fresh Top Fruits is up 20%, Jash Industries up 20%, Saxoft, BL Kashyap, Arman Polymer, Associated Stone Industries, TGB Banquet, most of the stocks are up anywhere between 15 to 20%. You have Career Point, Tyach, Richa Industries, Ajmera Realty, one of the stock which was I think discussed in Multi-Bagger Diwali, that stock is up 15%. Most of these PSU companies, LML, HMT, IT are also buzzing up today. Simplex Castings, Genus Power, Shetron, Sagar Cements, Shilp Growers, Maharashtra Scooter is a new name, which doesn't buzz, and with the volumes with what the stock is up 12% today. Transchem Limited is also up today. GEE Limited is up 10%. Banaras Beads, I've been mentioning about the stocks the last many days. That stock has gained nearly 50% the last 3 or 4 days. Tokyo Plast International, Piramal Phytocare, Metallist Forging, a new name Pranand Vadya Spinning Mills is up 10%. Medicaps, Kalam Spinning Mills, Bengal Tea and Fabrics, most of the stocks good volumes, up anywhere between 10 to 20%.
Okay, Varinder, thanks so much for that. Even as the markets are coming off a tad bit from levels of near 7,900, keep your eye on Idea Cellular. Now it's up close to about 5.5 to 6% at the high point of the day, continuously gaining some ground. But let's move on. Dr. Reddy's has taken a big beating today after it's received a stern warning letter from US FDA for 3 of its Indian facilities.
And brokerages have been turning cautious on the Dr. Reddy's counter. In fact, Surya Narayan Patra of Phillip Capital cut their FY16 and FY17 earnings estimates for the company by about 3% each. So let's listen in to what they had to say.
With the warning letter indication itself, now we had earlier cut around 20% kind of numbers for FY17. And just now what we are doing is in order to factor the kind of recently the court injunction what it has witnessed for its generic Nexium, to factor that we are cutting our FY16 as well as 17 earnings by around 3%.
Okay, let's talk about individual stocks. We highlighted Idea. Siddarth, what's the kind of build-up that is taking place in Idea, and any early indications of what the stock might do in the next series?
Bharti, there was formation of short positions as stock corrected from higher levels, but 128 to 130 was good support. We first saw some formation of short covering happening in Idea around those levels, and now we are seeing formation of long. At the same time, I won't say that one should get carried away by this move. 155 to 160 remains a strong resistance, so Idea has been gyrating in this range. So we are now probably moving towards higher side of the range in Idea. So those who are long from lower levels, I would suggest hold on for some more quick bucks to be made, but fresh positional longs not advisable.
Okay, fresh positional longs not advisable, but where do you see fresh short positions that one can execute at the start of the December series, Siddarth? Because this month you've had a lot of vulnerable pockets, not just pharma, but even names like BHEL that have fallen 15%, Hindalco that has fallen about 11-12%. Any shorting opportunities that you can identify for us?
Sonia, though we are closing today November series on a positive note, but if you look at the overall structure of the series or how things have panned out, it's not very encouraging, and especially two sectors which have been always bellwether, whether it's a bull run or a bear market. These are the sectors which are responsible for taking market higher or lower. Banking, capital goods and infra. I'm clubbing capital goods and infra. So if you look at banking space, look at ICICI Bank, Axis Bank, SBI. Where are these stocks trading? These stocks are trading near to their lower levels with good amount of short standing in them, and which has got rolled over also. Look at one of the most important and proxy stock to our economy, L&T. That stock is trading at lowest point of this series almost, has good amount of short standing and got rolled over. If I just take these 5-6 names and see that these stocks are showing negative direction for coming series, I don't find any reason why I should be bullish on this market. Yes, there might be IT, some people would start talking that okay, depreciating rupee is good for the margins and all. There would be sometimes some HDFC Limited giving 1 day or 2 day spike, ITC and HUL trying to balance out. But banking, infrastructure and capital goods, these names are not giving any sign of comfort to this market, and that is the space where I would suggest traders should be short and trade with negative bias in December series.
By the way, expiry moves are visible in ITC, which is now at the high point of the day, a gain of nearly 2.5%. And on the downside, a big fall visible in Tech Mahindra. So Tech Mahindra too is at the low point. That's the 1 month chart. Let's pull up the intraday chart of ITC, and the other one is Tech Mahindra on the downside. So Darshan, come in on ITC. Any trade that you would recommend at 340? And conversely, on Tech Mahindra, what are you viewing?
No, first of all, this last half hour expiry movements are absolutely irrelevant to the trader. So while you can listen to them, please don't, traders know better than to trade on these, say, changes. It's not tradable and there is no pattern. So I'm not talking about the last half an hour of movements. Independently, ITC is making a base and coming out of it. So if you are an investor, if you are a position trader, as earlier I have been talking about Hero MotoCorp, so also surprisingly ITC is coming in my buy list, and this is not about the last 20 minutes.
Oh yes, I think you should take the last 20 minutes with a pinch of salt. Just look at the moves some of these stocks are seeing. Pull up the intraday chart of Bata. That one has suddenly spiked up about 9%. I haven't seen this kind of a move in Bata in a very long time. All in the last 5 minutes itself. Voltas is another one. So about a 7% up move. You generally see this on expiry day, where a lot of these trading pops come on individual names. 7% up move on Voltas. Jet Airways is now up almost about 7% as well, and in the last 10 minutes itself, the Jet Airways has found a new set of wings. So as you can see, they're higher. And a couple of other stocks, Shreya Shipping, which has been a big gainer this year. It's more than doubled this year, Shreya Shipping. That stock is now up 16%. So quite a bit of action is what you're seeing in the last 20 minutes of trade or so. Shreya Shipping should also be up for you on your screen. But let's do one thing. Let's get you some slightly longer term ideas. These are some wealth creating recommendations by Mr. SP Tulsian and Ashish Tater.
Automotive Excel is a joint venture company of Kalyani Group and Meritor Inc. of USA, and they are making rear axle and axle assemblies for trucks, commercial vehicles, off the vehicle, and having 3 plants in India. And if you see, company has posted very good numbers for H1 FY16. In fact, they surpassed the turnover top line of whole of FY15, which was at around 460 crores, while in H1 alone the top line is 510 crore. So I think this is a very promising stock with the reputed promoter like Kalyani Group, and maybe the stock can double in 1 year, but I have given a target of 850 in next 6 months. Ingersoll Rand is a 74% subsidiary of Ingersoll Ireland, and they are making variety of air compressors. And if you see now, the share is ruling almost at its 52-week low, which has been at about 730, 740. And going by this steady performance of the company, in fact, promoters are holding 74%. In the past, there was news that probably company may see the delisting move also by the promoters, but that is not factored in now at this stage. I think that stock has very limited downside and can move to a level of around 990 in next 6 months.
Amulya Leasing sounds to be a NBFC company, but it is not an NBFC company. The name got changed to Apollo Irrigation. So now if you see the consolidated front, the company has been doing sales of around 25 crore per quarter, which we expect that for next year it will do close to 180 to 200 odd crores. From short term perspective, you can keep a target of 180 rupees, and if budget surprises, we will not be surprised if this stock turns out to be a big multi-bagger even from that levels.
Okay, those are some multi-bagger ideas, but let's talk about some of the stocks that are moving around yet again. As we were mentioning, big moves coming in at this point in some of the names like Bata. Tata Motors is now up about 6% so there's plenty of traction that you're seeing there as well. And something like Manappuram Finance is up almost about 12% right now. Prakash, what do you do with names, from the FMCG space like Bata that are up almost about 10% now?
I think Bata is probably waiting to kind of get back into the reckoning in terms of, allocations that were lightened in the last couple of quarters thanks to all the issues that it had in SAP implementation, reduction in single store sales. But, there is this general feeling that we've probably, seen it get into the oversold zone. And fundamentally, the management has sounded much more confident that going forward they'll be able to not only recover the setback that they've had in the last 2-3 quarters, but move forward with some new strategies. They've rationalized a lot of their network and the costs associated with the network. So my sense is Bata has become more of a value buy for people who are looking at some consumption allocation to kind of go up. But within the larger FMCG space, I feel one stock that stands out, Sonia, is Godrej Consumers. I mean, here's a stock which has a tremendous depth in its portfolio, a wide range of products in its portfolio, and it still kind of continues to be rated as a tier 2 kind of a stock within the FMCG pack. But it actually deserves much more in terms of the richness of earnings that it has shown and the kind of ownership pattern that we've seen build up. So I would believe more than Bata, if you look at from the FMCG space, GCPL will see a much higher allocation from the institutional side also in the new quarter. And of course, Bata will kind of take some time to get back into the radar for most investors and traders. But the stock to look at from this space will definitely be GCPL.
Okay. Sudarshan, since the last 30 minutes of the expiry moves are quite tricky, let's focus over the longer term. M&M is a stock which has rallied more than 150 rupees in the last maybe 5 or 6 trading weeks. Is there more upside from current levels of 1350?
See, it's difficult to say where there is upside in the sense the future is always unknown, but I think M&M is such stock that's worth buying into. The trend is intact. After a small and minor correction, the stock has started a rally. So if we are looking at a buying opportunity, M&M qualifies to be a buy.
Okay, M&M qualifies to be a buy, but let's do one thing. Let's also get you some more stocks that were in the news earlier today. There were plenty of them and we in fact touched base with a lot of managements. GVK Power was one. The company expects to turn into the black very soon. In an exclusive chat with the management, they mentioned that volumes are likely to improve in the quarter to come.
Something similar to what we had experienced in quarter 2. I think that's the kind of growth that we are expecting. On an average, if you ask me, I think Mumbai would grow at around 20% as far as passenger growth is concerned. Bangalore as a percentage will fare much better. I think Bangalore we expect the growth to be around 30%.